Let's go to Jennifer Schonberger. She's standing by. Jennifer.
Hi, Cheryl. Fed officials appear to be eyeing another rate hike next month amid a strengthened economy. Minutes from the Federal Reserve's policy meeting earlier this month showed. Cheryl, if the economic data comes in as expected, Fed officials say it will soon be appropriate to take another step in removing accommodation. Officials harping on strong consumer spending, strong business investment, a strengthening in the job market as they paint the picture of a strong economy. However, they do expect economic growth to slow down a bit in the second half of the year from that torrid pace of 4.1% in the second quarter, though they do expect growth to remain above trend. Now, on inflation, they do see inflation close to their 2% target. In fact, they expect that it could temporarily move above that 2% target in the short term. And part of that rationale is because of increases in prices due to tariffs. Though they say that negative effects from trade on agriculture may, as far as trade is concerned, may offset some of that. Now, speaking of trade, they say that businesses continue to voice concerns about trade disputes. However, they are not seeing businesses cut back on spending or hiring as a result, though they worry that if trade disputes are prolonged, that could ensue eventually. Bottom line here, Cheryl, the trade disputes are not hurting the economy right now. In fact, the Fed views the economy in strong shape. They see inflation close to their 2% target, and as a result, we should probably expect a September rate hike. Back to you.
Jennifer, really quick question for you. Anything about the word neutral and their use of the word? You know, we've had a lot of questions since the Fed decision came out. This one that you're looking at with the minutes now, what does neutral exactly mean, a neutral rate? Did they address that?
Yeah, absolutely. You know, I was surprised. I didn't see a lot of talk about neutral in there. There was more talk about tariffs. They did mention the yield curve a little bit, but in essence, what neutral means is that it is the rate at which the Fed is neither spurring nor slowing economic growth. And so the Fed feels that they are in an accommodative state right now. They haven't really gotten to neutral yet. Now, there are a range of estimates within the FOMC for what the neutral rate is, but they still think they are in that accommodative phase. Now, they did mention in the minutes that at some point in the near future, they would expect to remove some of that language from the statement as they get closer to neutral. So certainly something to keep an eye on as we move forward.